Welcome back. You're still tuned into ET Now, and let's take a look at Reliance Industries numbers, and they've just come in where consolidated revenue has come in at 2,94,000 crores. This is for the fourth quarter. This is an increase of about 11% on a sequential basis and a growth of about 12% on a year-on-year basis is what we are seeing. EBITDA, meanwhile, has come in at about 44,140 odd crores, which is a decline of 4% sequentially and an uptick of 1% on a year-on-year basis. But margins this time around has taken a beat, at least as compared to estimates. Now, remember, EBITDA margins, we were expecting the figure to come in at about 16.5%, and it has come in at 15% in the quarter gone by. So that is one figure that has come in weaker than what the street was working with. We will wait for more internals, especially when it comes to their Geo business, because ARPUs were expected to rise this time around. So segmental performance will be something that we need to watch out for. But profitability has come in at 16,970 odd crores. This is versus ET Now poll of about 18,200 odd crores. Revenue at 2.94 lakh crore rupees. This is much higher than what the street was working with, and even on a quarter-on-quarter basis, revenue for Reliance Industries has risen by about 11% and a jump up of 12% on a year-on-year basis. Now remember, as far as the segment-wise performance was concerned, we were expecting some bit of weakness when it comes to their oil and gas business because of West Asia crisis. And that clearly seems to have impacted companies' EBITDA this time around. We'll try and get in more internals and the segment-wise performance in just a bit. But for now, it looks like it's a mixed set coming in. Revenue has come in definitely above what the street was working with, 2,94,000 odd crores, which is an uptick of a solid 11% on a sequential basis. So clearly, it's a beat when it comes to revenue. But as I mentioned, margins have taken a hit this time around. We were expecting a figure of about 16.5%, and it has come in at 15% in this quarter versus 17.4% that the company had reported in the previous quarter. So that's as far as Reliance's earnings are concerned. But remember, several factors continue to remain at play for Reliance Industries. Reliance Jio is all set to get listed this year. So any kind of valuation jump up that we see for Reliance Jio is likely to have a positive impact for Reliance's stock price as well going forward. And remember, Reliance is one stock that has underperformed the market of late. Several factors which continue to remain at play, and that have clearly weighed heavy on Reliance's Industries performance this time around. But for now, as far as profitability figure is concerned, at about 17,000 odd crores. So no major miss over there. Revenue clearly is a big beat. It has come in at 2,94,000 odd crores. As I mentioned, it is an uptick of 11 to 12% both on a sequential and on a year-on-year basis. And as far as the margins are concerned, they too have come in at 15%. Now let's also take a look at segment-wise performance. O2C revenue has seen an increase of 14% on a sequential basis. Oil and gas revenue has seen an uptick of 1% on a sequential basis. So oil and gas revenue in this quarter has come in at about 5,870 odd crores, which is an increase of 1% sequentially. But as I mentioned, digital services, which includes telecom arm Reliance Jio, has performed very well this time around. Digital services revenue at about 46,000 odd crores versus 44,600 crores that the company had reported in the previous quarter. So sequentially, digital services revenue has seen a solid uptick of about 3%. So Jio clearly has shown strong performance this time around. And remember, we were in any case expecting strong performance from Jio on account of ARPU increase that is expected to come in. We'll have that figure in just a bit. And subscribers are also expected to be added this time around in the third quarter. So those are the two parameters which seem to have aided Jio's numbers, and that is the reflection that we are seeing for digital services as well. So digital services revenue at about 46,000 odd crores, an increase of a solid 3% on a sequential basis. And we'll talk about the retail business as well. We were expecting steady growth, and sequentially retail sales too have risen by 1%. And to decode this further, we are now joined by Mayuresh Joshi, Head Equity at Marketsmith India. Sir, thank you so much for taking your time out and joining us here on ET Now. Mayuresh, take us through what your expectations are. What is the kind of results that you're seeing from Reliance Industries? For now, it looks like a big beat, at least on the revenue front.
Yeah, it does seem to be a beat on the revenue front, but I think the more interesting aspect is expected to be how the petchem revenues and margins will fare in Q1. Because of the elongated nature of the crisis that we are seeing in the Middle East, the expectations in terms of the spreads, specifically I think polyethylene spreads and polypropylene spreads, how do they play out in terms of downstream pricing is something to be seen in Q1. And obviously, I think the retail-oriented businesses as a part of PSOTP, specifically Jio's performance in terms of numbers, should relatively hold out. But in Q1, I think looking forward, I think the expectation largely in terms of petchem downstream pricing and the core ONG business is something to be watched out for.
So that's as far as the consolidated performance is concerned. But Mayuresh, since you're talking about O2C and the oil and gas business, let's also talk about that. Oil and gas revenue has come in at 5,870 odd crores, which is an increase of 1% sequentially. But EBITDA has taken a big knock this time around. Oil and gas EBITDA at about 4,195 crores. This is versus 4,850 crores that the company reported in the previous quarter. So sequentially, oil and gas EBITDA has declined by 14%. That's the kind of knock that we are seeing for its oil and gas business. Now remember, we were in any case working with a decline of about 7 to 8%, but this has clearly been weaker than what we were working with. Your thoughts on oil and gas EBITDA this time? 14% decline QOQ is what we are seeing.
So I think it was expected to be a softer quarter. And again, I think the entire expectations in terms of the pass-through that probably happened, it might not have probably happened in the remainder part of March. And therefore, I think the bigger impact, as I said, is not about Q4 numbers. It's largely going to be how Q1 probably comes down the line. And therefore, I think with Singapore GRMs, which have remained extremely volatile, and with naphtha, a large part of the component which gets imported from the Middle East, might remain a little bit soft in terms of supplies. The feedstock option that Reliance has is far diverse compared to the rest of the players. But to a certain extent, they will also get impacted because of this. And therefore, I think on the ONG part of the business, softer than expected numbers on the EBITDA front. But Q1 might be equally challenging or even more as we head into the next quarter.
Okay, and Mayuresh, we also have the ARPU figure. It has come in at 214 rupees per subscriber per month versus 213.7 that the company reported in the previous quarter. We were working with 216, so it's a tad bit lower than what the street was working with. And of course, there were several factors which remained at play. There were 2 working days. There were 2 days lesser in this quarter as compared to the previous quarter. So that seems to have weighed heavy on ARPU figure this time, 214. What was your expectation?
No, I think I'm not too perturbed with that number because what probably happens is when we head into the next few quarters, what Airtel has probably done with the lower end packs, they've probably increased the prices to a certain extent. And therefore, I think the industry is moving towards higher ARPUs as we speak. Now, the calibrated increases will happen over the next few quarters. And therefore, I think if you try to embed numbers with higher ARPUs at an FY28 exit, which might be far higher than what we are speaking right now, obviously depending on the calibrated increase that they take over the next few months and quarters. I think the numbers will be far more resilient, specifically on the Jio part of the business. So not too perturbed with the ARPU number as far as Jio is concerned.
Do you expect some potential tariff hike in the telecom sector to come in ahead of Reliance Jio's listing later this year?
Not sure of the timing, as I said. But calibrated increases over the next few quarters is a given for the industry. And therefore, I think with Airtel, as I said, making the move first in terms of the lower end packs, there is a large part of the expectation built in that ARPU increases will happen over the next few quarters and years, which should sufficiently provide for the balance sheet or the EBITDA growth in general for the telecom players. Now, as we know, Jio has a relatively stronger balance sheet in terms of net debt with a very strong cash component. And therefore, I think any ARPU increases flow through on the bottom line, which increases the earnings perspective as far as the standalone Jio business is concerned. So as far as the timing is concerned, whether that happens before the Jio IPO, not really sure. But over the next few quarters, yes, I think ARPU increases is something that the industry should brace for.
Okay, so that's as far as telecom business price hike is concerned. But let's also take you through customer base, where the customer base has risen by about 7.4%. This is as far as the telecom business is concerned. And ARPUs have come in at 214 crores for the quarter gone by. We are also joined by Deven Choksi, Managing Director at DR Choksi Finserv, now joining us. Mr. Choksi, evening. Thanks so much for joining us today. Take us through your first thoughts on Reliance Industries numbers this time.
Yes, good evening. Well, I think they are more or less the financials numbers have come, I think, in line with complete expectation. We are about 17,000 crore worth of profit, which is, I think, was expected, and 44,000 crore EBITDA on a 2.9 to 2.95 crore kind of a top line. So, yes, I think this was probably, I think, most expected numbers. Little bit of confidence is arising because of the consumer businesses, both retail as well as the Geo platform. Geo platform is having about 52 crore subscribers, and at the same time, I think ARPU has increased to 214, which we believe that financial year 26-27 would see a systematic increase in ARPU quarter by quarter if it is going to be in the vicinity of around 8 to 10% growth over the ARPU of this last quarter, that is 214 rupees. That could be the next trigger for the higher amount of profit performance. In my viewpoint, I think one area where probably I think the numbers are little depressed or subdued, that is oil and gas exploration business. Because of the lower production in KG-D6, they have reported around 700 crore worth of less amount of EBITDA. But they have made up partly to that particular thing in form of getting better cracks in the month of March, particularly because of this war-related situation in refining business. So I think it's a mix as far as O2C is concerned, but retail and the Geo platform business, both of them have given impressive set of numbers, I must say.
Okay, so that's as far as the consolidated business is concerned. We also have some management commentary that has come in with respect to Reliance Jio, where Mukesh Ambani has said that he is confident of the timing going forward. We'll try and get that in just a bit. But for now, numbers look good. In fact, Reliance Jio's Mukesh Ambani has said that, yes, we did face geopolitical uncertainties, disruptions, volatile energy prices in the quarter gone by. But he is very confident on the outlook going forward. Jio continues to transform India's landscape, and he says that robust full-year EBITDA growth of 19% for Reliance Jio was on account of traction in mobility, broadband, home broadband, and enterprise services. He has also spoken about O2C business and the recent events that have underscored critical need of energy security. So clearly some comments that have come in with respect to how the performance was in the quarter gone by, and he's also very confident on the outlook for Jio business, because he has said that Jio is well placed to shape how India communicates, computes and consumes content in the years to come. So clearly the commentary has come in positive, especially at a time like this when there is a lot of geopolitical uncertainty, and that has weighed heavy on the numbers in the quarter gone by. But Deven, your assessment of how the stock could react on Monday, and how do you expect, basis these numbers, how do you expect the stock to open on Monday?
See, as far as I think we will have to wait for analyst meeting and the call which takes place. I think because a lot of points are required to be clarified. As far as I think the impact of this crisis, I think in Midwest, probably I think that is where one would like to get a lot of clarity. On one side, they are having relatively better times because of refining margins, or the cracks are on a better side, at least healthier side in this quarter as well. So far in the month of April. And at the same time, I think the petrochemical product prices are going to be, I think, spoiled sport to a certain extent, because I think the kind of wild margins swing that we are seeing is not going to be very healthy. So we want to listen to that part of the commentary before saying how it would react. Basically, more important aspect is the consumer-facing business. They have been saviors. I believe that Jio platform with 52 crore plus customers, 214 rupees ARPU, and going in the direction of somewhere around 228 to 230 rupees, I think kind of a thing by the end of the financial year 26-27 is a strong tailwind as far as the JPL or the Jio platform is concerned. And at the same time, in the Reliance retail, which is, I believe, I think is going to be a trump card hereafter. because in Reliance Retail, the number of stores have increased at the rate of around one store per day in the last financial year. And this is now taking the tally to 20,160 stores, which in my viewpoint, I think with their own brand, and if they start generating higher amount of revenue, which is the implementation scale that they are going to be producing, in my viewpoint, both retail as well as Geo platform, they are going to be real trump card in the this first quarter as well. So I think the stock should be reacting steadily in my viewpoint, though there will be some reaction because of the fall in the margin on a comparative basis. But overall, I think the business prospects remain as strong as one would think about as far as the company is concerned.
You're expecting the stock to react steady on Monday, but perhaps we could see some bit of negative reaction on account of margins, which have come in lesser than street expectations, and even on a sequential basis, EBITDA margins have contracted. Mayuresh, would you concur with these thoughts that perhaps we will not see a major reaction on the stock or no major upgrades or downgrades from brokerage houses come Monday?
No, I mean, I agree with Dividend to a large extent, but to a certain extent, I think looking at the deterioration in margins and the expectations in terms of Q1, I actually expect it to be below par for the various reasons that I enumerated. I think the expectation is that the second half recovery is something that the markets will probably pencil in for both the upstream petchem as well as some element of recovery in the discretionary businesses on the retail side. And therefore, I think I don't perceive any major downgrades coming through. However, I think the sentiment might be negative as the stock opens on Monday. It might consolidate, but as Q1 numbers probably go out of the way, my own sense is that the price and time consolidation that Reliance will probably go through, there is a potential upside in terms of various tailwinds that the stock probably has compared to the industry.
Okay, so perhaps we could see some bit of negative reaction, that's the word coming in, but we are also joined by Sudeep Bandyopadhyay, market expert. Mr. Bandyopadhyay, good evening. Thank you so much for joining us today here on ET Now. Your initial thoughts on how numbers were in the fourth quarter for Reliance?
Well, I think it was kind of mixed, and to an extent, subdued numbers were expected by the market as considering what's happening around us as far as O2C and oil and gas segments are concerned. Of course, we will have to wait for some commentary from them on the Jio IPO timelines and other parameters, which we will await eagerly. Retail, by and large, I would say, was on expected lines. ARPU growth on the telecom side was, again, pretty much factored in. So, mixed results. Nothing really to get excited about. So I would suspect that market will take it in its stride and move on. Reliance will consolidate for some more time. But fundamentally, value unlocking wise, I think there is potential.
Value unlocking wise, there is potential. We'll talk about each of those segments in just a bit. But since we are talking about Reliance Jio, let's also talk about that because ARPUs have come in at 214. What was your expectation? And as we gear up for Reliance Jio's IPO later this year, are you expecting some potential tariff hikes which could probably aid ARPUs going forward in the next 2 to 3 quarters?
Oh, absolutely. The ARPUs are expected to go up. In fact, the entire industry will move in tandem, and somewhere we will see the ARPUs going up definitely in the near future. Whether it will happen in the first quarter or in the beginning of second quarter is what we may debate, but it will definitely go up. We'll of course have to see the timing of the IPO and wait for some announcement from the management about the other contours of the IPO.
Clearly, and timing is also one thing that is perhaps a little uncertain. Of course, Mukesh Ambani had last year guided for an IPO of Reliance Jio in the middle of this year, and bankers have already been appointed. So probably it will come through in the next few months. But Mr. Bandyopadhyay, I also wanted your thoughts on the retail arm. Mr. Choksi was just alluding to the fact that how consumer-facing businesses of Reliance Industries have done well vis-a-vis the oil and gas business, which has underperformed this time around as compared to its other businesses. Your thoughts on Reliance Retail's performance? I understand that the company has been expanding across its quick commerce arm, and that is weighing heavy on company's margins this time around. But your thoughts?
Well, I think they're building for their future. The expansion is happening and happening in the right direction. I think they have to be in the market. They have to face the competition, and expanding the quick commerce piece was very, very critical. I'm in a way, I'm a bit surprised that probably they did it a bit late. Probably they should have done it earlier itself. In any case, that they are now doing it is good news. Compromising on the margins for some time to ensure establishing themselves in the quick commerce space and gaining market share is very important. Otherwise, also the expansion, brick and mortar expansion is happening at the expected pace. So I think it's all good news as far as geo and retail is concerned. The market was expecting anyway a soft quarter in terms of O2C as well as oil and gas, and pretty much that's got played out.
But given how geopolitics and everything in West Asia has panned out so far and how it is progressing now, Mr. Bandyopadhyay, do you believe that perhaps the tide will turn for its oil and gas profitability in the next few quarters? Or do you think perhaps trend is likely to continue going forward, at least till we have some more clarity on where West Asia conflict is headed?
You're absolutely right. We have to get some idea as to where West Asia conflict is headed. There are too many variables, and it is impossible to predict with any amount of certainty how things will move in this space. We'll have to wait and watch. Maybe in the commentary they will talk about that crude sourcing strategy as things are moving. Also, they may give some outlook on the GRMs. We'll have to wait and watch all those. But having said that, irrespective of whatever they say or they give outlook as far as the O2C and oil and gas, uncertainty, geopolitical uncertainty will play a heavy role. And anything to be said with certain amount of certainty is impossible as of now.
But Reliance Industries clearly has underperformed as compared to Nifty. I was just going through the chart and Reliance is down 15% on a year-to-date basis at a time when Nifty has declined about 7 to 8%. Basis what the earnings trajectory is going forward and given how numbers have been for the fourth quarter, what is your expectation on how the stock could react on Monday and over the course of the next 1 or 2 odd months?
Well, as far as Monday is concerned, I think market won't be too excited with the result. As I was mentioning, this is by large in expectation, in line with the market expectations. And anyway, the expectations were nothing great. So I would suspect the market, it will move in tandem with the market. It will consolidate for some more time. I think the real excitement of the market will come with some clarity on Jio IPO. Some clarity, if at all, comes regarding value unlocking, strategy for retail, and some concrete announcement on the new energy businesses. See, market will not get excited with these results. Market will wait for some concrete announcements on these new business lines. Of course, as I mentioned earlier, from a long-term investor's point of view, value unlocking will happen. And, accumulating at these levels slowly makes sense.
Right. But Mr. Bandyopadhyay, do you believe that more than earnings, it will be Jio's listing that will probably play a role in deciding how Reliance Industries stock price trades going forward? And what kind of valuations are you penciling in? Do you expect that to be a big re-rating trigger for Reliance's stock?
Well, this is exactly what I was saying, that O2C, oil and gas, will not excite the market as of now because of what is happening around us in the geopolitical space. What will excite the market is Jio IPO, Reliance Retail value unlocking strategy, and some announcements on a new energy. Now, out of these, at least Jio IPO has been announced by the company in the last AGM, and they had given some timelines as well. So some specifics around that will definitely cheer up the market. Yes, some amount of re-rating is definitely possible based on the way the Jio IPO comes and Jio IPO shapes up. Obviously, there is significant potential for value upgradation as far as the telecom business is concerned. Because if we look at Bharti and compare with the sum of parts valuation of Reliance, I think we are not fully valuing Jio on a consolidated basis at this stage.
Several value unlocking triggers that continue to remain at play for Reliance Industries, but for now it looks like a mixed bag where revenue has come in ahead of what the street was working with, but margins have been below. But all eyes will be on management commentary, especially around Jio listing, which is slated to happen in the middle of this calendar year. Mr. Bandyopadhyay, thank you so much for taking your time out and joining us here on ET Now in assessing fourth quarter results for Reliance Industries. Perhaps we are not expecting any major knee-jerk reaction on Reliance's stock on Monday. But that's all the time we have on this edition of the show. Thanks so much for tuning in. More news and updates will continue on the other side.